Before we get into this week's resin market update, I want to share something I've learned over the years working with the various clients here at Resin Smart by RTI. So, in the small to medium sized plastic processing world, the largest variable cost in the business is almost certainly plastic resin. It's 50, 60, 70, 80%, depending on the process. We have an owner of a company that fits that size between 20 and 30 million in annual revenue that mentioned something along the lines of, the person responsible for resin procurement in company of my size is almost always me, the owner. And if it isn't, it should be. Well, that is becoming more and more taxing for owners because they have to wear four, five, six, seven different hats. And those can be very, very difficult to keep up with the market as dynamic as it has been. That owner often finds themselves in this position because the impact of those decisions are so important. It's the owner's wallet after all, and where half a cent per pound can change profitability in a huge way. The challenge for those procurement leaders and those owners are they're expected to make those decisions with limited data, limited support, and limited time when they've got all these other jobs they have to complete. And that's exactly what Resin Smart was designed for and why it exists, to give buyers, these owners, or if they're lucky enough to have small teams be a part of the organizations, these teams, data and support that they need in order to compete in the modern market, which, let's face it, is not built and it was never built in their favor. So now let's talk about what's happening in the market. This is Resin Market Moves. Today is March 7th. The geopolitical situation in the Middle East is not getting any better. In fact, it's getting worse. It's starting to ripple its way into the energy markets and petrochemicals. Crude oil has surged significantly above $70 a barrel. Propylene prices jumped sharply, and polyethylene producers are already pushing price increases of up to 10 cents a pound for the month of March. The big question that we should be asking ourselves is this a tightening market or is the narrative changing? Let's get into it. In polyethylene, February contracts did roll flat, which we had expected and many buyers had expected. But producers are now pushing March increases as high as 10 cents a pound, really pointing to the geopolitical uncertainty and those rising energy costs that I mentioned before. The most interesting part of this is demand hasn't meaningfully changed. Supply is relatively healthy and most buyers are still purchasing on a needs only basis. So right now it looks more like a momentum push than something fundamental. But again, the wild card is going to be what and how long this Middle Eastern situation happens to persist. Polypropylene's a different story. Contracts are up 4 cents a pound in February, and that's tracking to the higher PGP polymer grade propylene costs. Spot propylene prices surged nearly 20% this week. That is directly related to the volatility in the energy market. And so at the moment, polypropylene pricing is primarily related to the feedstocks, not a demand recovery. If energy markets continue or start to stabilize, polypropylene pricing should moderate quickly. In the other resin families, conditions remained mixed. I mean, polystyrene is seeing some cost pressure, again, from feedstocks, benzene and styrene. PVC continues to face turnaround season-related supply pressure across the different North American plants that are affected. But the engineered resins like ABS, polycarbonate, the nylons, 6 and 6,6, and the higher number of nylons remain relatively balanced. Demand in those end-use market segments is still fairly soft, and most buyers are continuing to just purchase what they need. So what to watch out for when geopolitical events, including what's happening in Iran, impact the resin markets? There should be a focus on three signals. Energy markets, so oil, propylene, and benzene are the leading indicators of what we need to be paying attention to. Impacted global trade flows. So if international markets continue to get some tightening, we're going to see overseas buyers pulling more resin from North America, which is going to further impact at the domestic market. And third, we need to keep our ears and eyes wide open to supplier narratives, because as we all know, during periods of uncertainty, there are attempts to establish momentum with price, even when the fundamentals remain fairly balanced. In markets like this, discipline matters. Avoid panic buying. Continue to keep your eyes on those feedstocks. And most importantly, let's separate real supply constraints from those narratives that are in the market. Right now, we're seeing cost pressure building but with demand remaining soft, we'll see how long that lasts. The buyers that are going to outperform during these types of volatile cycles are the ones that rely on trusted data partners and insight. We'll continue tracking this and be on top of this for you guys. Next week's resin market moves. And if you're a resin buyer and want clearer insight into where the market is actually going and where your price should actually be, reach out to us. The best procurement leaders, they don't go it alone. They build a team of experts around them to support. All right. Have a great week, everybody. Talk soon.